Greetings, Jedi traders. David here of TradingFibs.com to bring you the market outlook and brief recap for week 19 as we lead into week 20 of 2016. Today, here we are, May 15th, as we are just minutes ahead of the Sunday Open. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only, to support your knowledge in the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. All right, guys, we're going to make this a brief recap outlook for the week. Let's jump right in as week 19. There it was, 31 setups, 666 on the ticks net for the week. Again, majority of those ticks falling to the NQ, followed up by the YM and the ES. All right, don't get superstitious on me for the 666. That's the way it ended up for the week. Again, piling on those setups with Friday's session as showing that just going in and out, a great tool to start identifying, not acknowledging, but being able to identify the setup, taking the highest probability entry and getting yourself trained to just see those. Again, step one in a progressive of being able to ride the trend. So again, average, we usually fall underneath that 25 or 20 setups for the week. So there we go, a little bit more than average. Couple of trends for the week. Tuesday session here, we can see price action in the PM session here on all three indices really lifted to keep you in the trend, followed by the next day, which we completely turned it around. So always being ready in both directions. So those two major trends for the week. And there it was on Thursday, that Thursday session, which had all three indices to the downside. Perfect picture Thursday we had talked about. You can capture those images, including the write-up I went ahead and did on the blog at TradingFibs.com. Here again, holding underneath a 50 EMA as well as a T350s. I mean, we've been placing on the charts recently to once price action in trend. Great way to be an additional tool to identify a market that is progressively holding in a trend downwards or upwards. Doesn't matter which direction. All right, let's go. Let's jump into the week and see where we are and what's going on. As far as volume for the week, we're pretty much somewhere around that average, couple days below, couple days above, so it averages out to that 60-period moving average. Again, key thing on the NQ is that we're holding underneath the 200-period moving averages in the 50. We did have a bounce there up on Tuesday and Wednesday. Thursday and Friday just continuing the downslide. So again, there it was, Tuesday uptrend that we saw just a couple minutes ago there on the charts, and then we just reversed it back the next day and offered us a downtrend. Same picture, similar picture on the ES is the downtrend now breaking that 50 EMA. Let's get back to the NQ for a second. So here we are as far as trend is concerned. Again, I am not going to sit here and tell you this is where we're going next week. I can show you a chart of Apple. I'll show you a bunch of articles I've been reading. Here's the low, here's the low. You got to buy it now, and Apple's still moving down. So I'm watching the charts for the momentum. I'm sticking here to the futures for this presentation, but as far as the futures are concerned, most likely we are in what I am calling a confirmed downward trend. And we've rejected not only the 200 MA here on the NQ, rejected here on the 144 on a 4-hour chart, as well as the 50 EMA there on Friday. So as long as we hold underneath and can't break this 144, we're still in a downward trend. So I'm looking to the NQ at this point. If we continue at least on a daily basis, I'm always ready in both directions, but as far as the bigger picture, NQ in a confirmed downtrend. ES, same picture, just a little bit further back, just breaking the 50 EMA. We saw the support there about a week ago, or it was just, about a week ago, and here we are back again. Now we're underneath the 50 MA. Watch for the 200 MA to be the next level of support. As price action already here, you can see on an 4-hour chart for the majority of the week, did pull back, but the 50 has still been below the 144, so that is the continued power trend. Here we go on the YM, breaking the 50 MA, same picture as the ES. Look to the 200 MA for support. Usually I would say is if the 200 MA was further down, look to the 4-hour levels first, and right now we are under the 4 hours. So If price action comes down, continues to drive down to a, nothing ever always goes straight. So what you'll want to look for is price action. If it were to pull back, you'll want to look for the 50 and the 144 EMA as resistance back to the upside. Let's take a look at any of our daily gaps. Taking a look at the crude as well. Price action here. Holding down. Actually, let's go back. Sorry, I meant to pull up the crude here. Here we are on the crude T3 moving averages. Again, holding upside. T3 moving averages holding upside. 50 EMA as well as the 144 EMA here on a 4-hour chart. So positive trend on the crude. Positive trend remains on the crude. And here we are on a daily chart as crude holding up on a fib level here, fib extension, including the fib retracement within the fib extension, so pretty much holding up at the 23%. We're looking at 47.97. Where do we see that? That's right here on the daily gaps as price action. There's your fib extension and your fib retracement. Now, concern over the crude in the weeks to come is eventually I see crude coming back down to at least 40.24, 37.90. When that hits, we'll close out those open gaps. Meanwhile, look to the fib extension upside. We got some recent highs here where price action retraced 48.38, 50.33. Our next major open gap 55.41. So that is your upside level. ES here, price action holding up at the 23%. Again, I've said week after week, day after day, we've got an open gap all the way downside on the ES. That's right, 1860.75. Eventually, that market will go down. So how do you pair this up? Well, take the daily big pick that we just saw here. Let's go ahead show you the bigger picture here. So here's your ES 200 MA at 1991.14. We're definitely in a downtrend on the 4-hour chart. You come to the daily gap, you see price action here on the ES holding it to 23. So our next level down is a 38% retracement. Well, you go to the daily big pick and you take a look at what's that level, 1991 for the 200 MA. Oh, seems like we got a close match there, so we'll look to that 38%, especially on the intraday if we follow through to the downside. Similar picture on the YM. We have an open gap all the way downside, 15.924. The highs of 2015 here around 17.895. No major open gaps above. It is the NQ that actually has open gaps in both directions, both above at 45.80 as we hold here at the 38% retracement and 40.17 down below. So right now the technical momentum is to the downside, and I know on those indices with 100% guarantee, that's right, you heard it, 100% guarantee, we eventually close out open gaps. So hey, at some point that NQ is coming down. We've had a nice rally. We're in a fib retracement. We definitely break that 61.8. We're definitely going to get that downside level. All right, looking at the VPOX as Sunday open is already here now, 17,625. You could see price action. We've actually had a small shift on that in the last couple weeks, but there's your 600-day VPOC, a magnet of the mean safety zone for the market right now. Price action 42.81. There's your VPOC and the NQ. 20.60.50 for the ES, and we're still struggling, but eventually if we get back upside, that draw towards that 53.97. All right, what are we looking ahead for this week economic data wise? We finished off with last week. Let's get back here just for a second. We finished off with a lot of econ data there on Friday to wrap up the week, including our crude report weekly. So as we roll into the third week here of May and eventually getting into contract rollover, which is always fun here on the futures. Yeah, as we start out with Monday, just a couple economic data. Tuesday should be full. A lot of red star events here with multiple Fed speakers. But it's going to be, once again, back to Wednesday, crude report and FOMC. Boy, did crude disappoint this week. So FOMC minutes on Wednesday, look for a mover. Jobless claims on Thursday with a whole host of T-bill announcements and then existing home sales, which you can see the market move for the week as well. All right, that concludes this week's brief weekly outlook and recap. Feel free to stop by tradingfibs.com or any of my social media outlets to obtain more information. My mantra of one simple strategy, any market, any chart, A time frame will keep you disciplined. You can find me every day on Twitter at Trading Fibs. As always, I leave the crystal ball to the experts. Make sure you check out my weekly futures, ETF, and market cap leaders, where I go ahead and give a brief outlook as well. You'll find this week's video here as well. In just a couple words, my technical outlook of where we're at, as well as the weekly supplemental, the technical momentum outlook. Go ahead and click. 98 pages of full of fun, where I cover a variety of different markets, including watching the technical momentum here. Where is the short-term trend? Where's the long-term trend? And just looking at 3 charts. Again, what I said was no crystal ball. I leave that to the experts. But again, covering markets from the futures, market cap leaders, industrials, FX pairs, etc. I only trade what's in front of me and on my charts every day. And as always, I leave my bias at the door when trading. Have yourselves a Blue Zone day. See you guys on Twitter this week. Good day, good night, and good trading.